fuck going on, Wailers?
GCI, and that shit gon' fall. Rather die than my bitch till it's
Hello, everyone, and welcome to this amazing episode of Education Street. Before we dive into some of the current phenomenon of YouTube and TikTok business advice, and may God help all of us, please make sure to tell your girlfriends, your wives, mistresses, baby daddies, your grandparents all about us. Please make sure to click subscribe. It's very important because we're trying to trick that algorithm. And you can also listen to this podcast on various streaming sites such as Spotify, Apple Podcasts, Anchor, and a host of other sites. So let's dive in to this episode. Lately, there's been quite a phenomenon on TikTok and YouTube and the other parts of the internet world, such as Instagram, with a lot of so-called, entrepreneurs who have suddenly, think that they can give tax advice to people when they probably should not give tax advice. Now, to just be fair, I am not a CPA, but I did graduate from UC Irvine's MBA program. It is a top tier 1 program in the country. I've gone through various stages of VC funding where, you start a company from the ground up and you go through stage 1, stage 2, stage 3. I've been a business person for about 2 decades now. I don't like to use the word entrepreneur for a host of reasons, but one primarily is because everyone and their baby mama thinks they're an entrepreneur now. When you employ one person, and that's yourself, with all due respect, you're not really an entrepreneur. You just are not. The word has lost meaning. So I'm going back to the Gilded Age, and I like to refer myself to a business person because, at my height, I was supervising and managing over 60 staff members. Now it's around 30, just because I've cut back on things I've been doing in life. But with my businesses, if I include my support staff, that comes from, our vendors and things like that, it'll probably be above 60 people. So hence why we don't like to use the word entrepreneur, because everyone apparently thinks they're an entrepreneur. And the dilemma with a lot of these TikTok, videos and just a lot of the YouTube videos as well is what's happening is a lot of people are swimming in the same diarrhea pool, and they're just repackaging this diarrhea of information differently. Most of this shit you can actually just Google, and there's a bit of a problem with that. And this comes back to our education episode that we had, where the kind of disrespect and the lack of appreciation of a proper education has played into. Because you see, what's happening is people are repackaging, like, for example, how to write off a car. That's been like a big theme, for example. Like, it goes up, and what's interesting is, like, we've been seeing a lot of people basically like one person will say it on TikTok, and then like 20 other people will go and basically repackage and reformulate the same shit they saw on TikTok. But the problem is that you're getting fed a lot of lies. It's a lot of misconception, and then there's also some half truths. And what I mean by that is some of the things they're saying, they are correct, but it's not the full version, and they're missing some of those steps in between. And that's how you're getting a half truth, and that's mainly a result of when you don't have that educational background combined with the business experience. Those gaps in between, those steps in between, are missing. So, there was a video that was brought to our attention, and I'm not here to dog the person. It takes a lot of cojones, takes a lot of balls to just go ahead and make a video and deal with the internet world, which has a lot of negativity, unfortunately. And to be honest, his name is Carlton Dennis. I think genuinely he's trying to do some good out there, and he's really just trying to help people. He's a real estate person, and in my experience, real estate people love giving tax advice because it's a big part of their transaction, and they usually deviate away from a lot of the real estate tax savings that occur to other things just because they're trying to help their clients better. For the last 10 years of my life, for me, for example, I love giving business advice. I do business consulting for a lot of people. It's a hobby of mine. It's a passion of mine. I truly enjoy it because there's just so many things that occur when you're a new company, a new startup, and dude, it could be anything. You can be, a mental health therapist, right? And you're trying to figure out how to make your business succeed, right? There are certain things that, unfortunately, for 90, I would say, let's just say 95% of people, they're very smart, but the business side of things, they don't teach that in school anymore. I could tell you, even as an MBA, it doesn't matter at UC Irvine or at even Harvard, there are a lot of things in the business world where these professors don't know shit. What they're really good at is getting, they're good at teaching you a lot of the fundamentals of like how to move yourself up in a company. But that grind it, like I want to go out there and be a Ronin warrior, a samurai who's by himself, is a little different. So Carlton Dennis, I think, is doing a great job. We're going to stick to his video regarding how to write off a car. And Carlton, if you're watching this, there's no ill will. I applaud you for coming out there and really trying to help people. We're just going to correct some things or chime in on some things because this was brought to our attention by a few staffers and some other people as well. So this first funny thing is he has mileage spelled wrong on his blackboard, but his little box at least has the word mileage spelled correctly. So for most people, when you watch certain videos, just look for things like that, because if they have things spelled wrong, you should deviate away from it. In his case, for whatever reason, it was spelled wrong on the whiteboard, but on his little pop-up, it was spelled correct. So when you buy a car for your business, one thing that you want to know is that you can reduce the mileage. So basically what happens is not reduce mileage. You basically get an incentive to write off the miles that you drive for your car. In the video, Mr. Dennis had said it was like 57.5%. It's actually 57.5 cents per mile. So if you drive like 15,000 miles a year, doing the math off the top of my head, that's roughly like $8,600 that you get to write off, and it goes against your taxes. So for example, let's just say you owe $10,000 to the government and you drive 15,000 miles a year in your business car. Maybe you're a construction worker, right? Like you have a construction company, excuse me there. You get to write off $8,600. So essentially you would then owe, if my math is correct, I don't have a calculator, we're going old school, you'd owe about $1,400 to the government. So for example, in that case, you would save a lot of money. Now, if you don't write the mileage, most of the videos out there, you can deduct most of the wear and tear, the repairs, like the oil changes for your car. Now, this is the thing where a lot of videos do not elaborate on, and this is where you can get in a bit of trouble, because at the end of the day, I'm just going to be honest, depending on what your income is from your business and on whatever that income is that gets passed down to you, okay? Most of those things, like the repair, the insurance, most of the CPAs that we've worked with do not include them for most types of businesses. They don't do it because it just creates a little bit more hassle than benefit. So, the pain in the ass to like gains reward here, it's going to be more on the pain in the ass section, because like at the end of the day, like I said, depending on what your income is, it's really pennies to the dollar for a lot of those expenses. Okay. An example would be, for example, if you have a construction company, okay, and let's say you bought 5 Ford Raptors, okay, and these were only used for work. Like, I mean, these are cars that you have an office. They park those cars literally like 95% of the time there. They are used to go to construction sites and do work and come back to the office. If you have a scenario like that, pretty much everything that is related to that vehicle, you can pretty much write off. In that case, abso-fucking-lutely, you can go and your insurance, right? your like tire repair, oil changes, maintenance, all those things become part of your business expense. Okay. Now, the flip side is, let's say you're a dentist, okay? And you bought yourself a Mercedes AMG C63S. Wonderful car. It's going to be kind of hard to deduct like the insurance and the repairs and all those things. You can do it, but a lot of the CPAs that we know, like I said, don't include those deductions. If you're leasing the car, they'll definitely do that because it's probably like a $800 to $1,000 lease payment a month. But otherwise, most of the CPAs that we worked with, like in the last 10 years, they just won't include a lot of those other things because they're like, look, you're a dentist. Like, yeah, you're probably using the car for work, to do things, et cetera, but you're not a construction worker. So it's going to be a little bit harder to write those things off. If you're an OnlyFans model, okay, chances are you're above your parents, you have a room above your parents' house and you're having some great shows, okay? Now, depending how you get paid from OnlyFans, it'll be kind of hard to include a lot of the wear and tear of your vehicle when you're just sitting in your room all day making money. So, one of the things a lot of the YouTubers don't go into and the internet world doesn't go into is that depending on your occupation, it's sometimes hard to include all of the expenses. Can you include it? Yes. But in the real world, your CPA will sometimes tell you, look, we're not going to include these things. We'll include the car lease payment. Or if you bought the vehicle, we will use the 5-year depreciation schedule for the vehicle. Now, let's say you are an OnlyFans model, okay? If OnlyFans is paying you under your name, you can't deduct anything, unfortunately. The way it would work for an OnlyFans model is, let's say your name is, I'm trying to think of a good savvy name here, okay? Let's say your name is Donatella Squirts Everywhere, okay? That's your company name. Donatella Squirts Everywhere Incorporated. OnlyFans pays Donatella Squirts Everywhere Incorporated. Let's say you go now lease a car under the name of Donatella Squirts Everywhere Incorporated. Now you can use that lease payment as part of your business expense because, chances are you are now probably, let's say, going to photo shoots. You're doing collaborations with other people in the studio. You got to go buy some fun sex toys to make your shows more exciting, right? So your vehicle now has more of a legitimate use and you're using it more, you're using at least 50% or more for it to be considered a business use vehicle. Now, one thing that happens is, a lot of these YouTubers, they go off of how the way that you determine how your car is used is by mileage usage. And, based upon that, you can get certain formulas as to what you owe. It's wrong and correct. So the mileage usage, I think a lot of them are honestly getting it from the idea of having a home office. And, when you have a home office, let's say you have a 2,000 square foot house and your home office is 1,000 square feet. So 50% of your home is used for business, right? But to just kind of go off of a tangent there, like when you pay for internet, your home office is not getting 50% of the internet. Like when you pay for internet for your house and you pay $200 a month, it's only $200 a month. You're not paying $100 a month for it. So, for example, in that case, you're going to pay the full amount. For your car, it's very hard to determine the exact percentages of your business use. So the general rule of thumb that most CPAs that we know work with is that if the car is used a minimum of 50% or more for business-related activities, and that includes going to your business and getting things for your business, it's considered a business car, okay? And that's for most businesses. Now, if you have like a construction company, you have, for example, a removal company, and you have trucks that you've bought that are specifically for the business, this does not apply to you because you are not using those to go to Vegas. For a lot of people who are self-employed and they're young business women and businessmen starting their careers, because the last year, a lot of people got laid off and they have found other ways to make money and they're actually really fucking happy. In your cases, just remember, if like half the time or more you're using it for business related events, you can write off your car. And you could use the lease payments. You can probably, depending on what type of business you have, and what your profession is, you can probably get away with deducting some other things as well. So let's say you're a real estate agent, right? And you went and bought yourself a BMW M5 Compact. Wonderful car. Highly recommend it. Okay. Let's say you went and bought that car. Now, and you have wear and tear on that car. You have repairs. You probably have a better chance of including those expenses in your taxes than you would per se like a nurse or a dentist would, because your job as a real estate agent, you are probably picking up clients and taking them around town. And if you live in California, you're gonna bend a rim and rip a tire and break a suspension at some point, because our money doesn't go anywhere. They just take, and nothing gets given back to us. So for example, in your case, if you have a very good CPA, they will probably say, hey, we can do this. The only caveat to that is it depends what type of car you have. Now, we said BMW M5, right? You can get away with it. Let's say you have a McLaren 720S, okay? Usually when you get into like these supercar, hypercar realms and cars that become extremely expensive, a lot of CPAs shun away from including those as a business expense because it kind of just sets off some alarm bells. You might be able to get away with it, but a good CPA will tell you don't include it because it's such a unique car that very few people will be using such a car for business related activities. So that's one thing that also a lot of the YouTubers and these TikTok people don't understand, is that yes, you can write off a vehicle, but not all vehicles are treated the same. One thing that a lot of people don't discuss is that you cannot deduct these things under your personal name. To deduct a car from your taxes, the car must be purchased or leased through your company. Okay? So that is one very important note to remember. In the video, Mr. Carlton says how he helps a client save a ton of money because she wanted to go buy a car. Now, I think he probably had a little bit of a brain fart because he said that she wanted to go buy an AMG S550. That vehicle does not exist. The AMG models usually end in a 53 or 63 for most of the Mercedes brand. And he probably meant an AMG S63, but then he talks about how she went and bought an AMG G550, which is a completely different car, and they don't make an AMG G550, they make an AMG G63, and the pricing seemed very off because, for example, a G550 costs $131,000 and some change MSRP, and when you include the markup of like 30 to 50K and then options, you're probably looking at like 180 to 200 out the door. A G63, I believe the MSRP is around $157,000 and some change. They have a $50,000 to $80,000 markup. So you're already going to be at 200. And then you put some taxes, licensing, registration, options. You're probably going to be looking at like at least 220. Okay. So I think you just had a bit of a brain fart. Not a problem, but we love cars on this channel as well. So we'd like to just point out some corrections. But anyways, she went and paid $155,000 for an SUV. Important thing to remember, you cannot do the bonus depreciation on a luxury sedan. So what is the bonus depreciation? I believe it was, under Obama and Bush. Sorry, Obama and Biden. I can't get my pasty presidents and vice presidents. I get them confused sometimes. So under the Obama-Biden era, they made certain changes for businesses to be able, because they wanted to boost the economy. And one way to do that was to get rid of the depreciation timetable for certain PP&E, which is your property, plant, and equipment that businesses were buying. And instead of spreading them, let's say whether it was 5 years, 8 years, 10 years, 20 years, whatever that timetable was, they allowed them to do it in 1 year. Heavy utility vehicles such as SUVs, heavy SUVs, trucks and pickup trucks and vans were included in this. So what he forgot to mention in this video is that if she went and bought the luxury sedan, which is the S550, she would not be able to do 100% write off on the car. Let's just say that car that cost $155,000. She would not be able to do the bonus depreciation. She could only use the 5-year timetable, and there's a formula that your CPA will follow. But she did buy the G-Wagon, and let's just say she bought a G550 for 155, okay? And remember, the only way she could fully depreciate that vehicle 100% is if she bought it underneath her business. If she bought it underneath her personal name, she's going to be in a lot of deep shit, and she's going to be very mad that she took that advice. It has to be underneath your business, okay? Now, how did she not pay any taxes? Let's just say she owed $150,000 to the government. She goes and buys this car for $155,000. So now she is negative $5,000 in income. Therefore, she does not need to owe money to the government. Some people go, why the hell would you do this? Well, do you want to give money, for example, like in the state of California, do you want to give more money to a state that has canceled your high-speed rail project and hasn't done shit with it in the last 20 years? We started in 2000, 2021. They're not building it anywhere. China built something that was triple the distance of our rail system in 2008 and finished it in 3 years. So I'm just saying, some people are like, fuck it, dude, I want to enjoy my life. That's the point of capitalism. That's the point of working hard, so you can enjoy the fruits of your labor. When you grow a little orange tree, you want to eat the fucking fruit first before you share it, you know? So anyways, so it serves as an advantage so that they can actually save money in the long run. That's actually something very important to know, because sometimes, you know, you will see companies, and everyone does it. Like even Boeing will go and do this, because instead of owing money, right, they'll go buy certain things, property, plant, or equipment, and it'll offload their taxes, and then they have more depreciation, which allows them to save more money in the long run. There was a defense contractor, I think in the 60s or 70s, I forget the name. It might have been Grunham, before they became Northrop Grumman. The name is slipping through my head, but they literally did not pay taxes for 15 years. So when you hear Amazon not paying any federal tax, like, you know, the thing that you want to remember is you shouldn't get mad at that, okay? I know it sounds ridiculous, but the reason why you shouldn't get mad at that is because if they change the laws on those guys, for all of you who are working so fucking hard to live that American dream, which is becoming much more difficult, because like, dude, when houses in South Central LA are costing $800,000, like, dude, in South Central, 800 G's? Come on, right? Like, it shows you how expensive, how the inflation is getting out of control. If they're going to go after them, guess what? Then you and everyone else who's trying to make a living to get to places, right? To provide for your families, or just to have a good time and not worry about money all the time, right? Because you're trying to bring in more revenue. If they take away those business privileges, it'll ruin this country, and it'll ruin you, and it'll ruin the economic lifeline, the blood supply of the United States. You know, what people don't understand, like when you hear a lot of these dumb politicians going, oh, Amazon didn't pay any taxes, blah, blah, blah. What they fail to mention is, for example, all the payroll tax that they paid, you know, all the state and local taxes that they actually end up paying. They federally might not have paid anything, but look at all the jobs they created, you know? I mean, look at all the businesses that generate wealth through Amazon, right? And one of the main reasons that they, for example, were not paying taxes was because when you are building hundreds of warehouses like every year, and you're investing in trucks, you're investing in aerospace, you're investing in like satellites, you're investing in drone delivery, right? Those things cost a lot of money. So those things will be offset against their income. and they have a depreciation timetable. So, for example, that same defense contractor who didn't pay taxes for 20 years, it allowed them to really succeed, hire more people, invest in more of their PPE, invest in more technology. And right now, the future for a lot of these big companies is really investing in technology and investing in the right people and investing in locations that will allow them to prosper. Now, if they take those privileges away, all of you who are watching this, you're going to get fucked. And you will never be able to have that upward mobility that the baby boomers had. It's not fair. So be careful when you hear these dumb politicians. They like to say things that make absolutely no fucking sense because none of them have a business and they're being paid by big business or competitors of big business to ruin a lot of us. So I don't went on a tangent, but just kind of remember that. So one very important thing to remember about the bonus depreciation of your business car is it has to be a heavy SUV or utility vehicle, which we said earlier was like an SUV, pickup truck, or van. It must be 6,000 pounds or more. Now, the question we get a lot is, well, what if I buy like a luxury sedan that costs 6,000 pounds? You cannot use that for the bonus depreciation. You will have to use the 5-year or 4-year depreciation timetable for that vehicle, and a good CPA will know what it is. It just is a basic formula. So, for example, like if you bought let's say a car that costs $50,000, your first year you're allowed to deduct $18,000. Your second year it's $16,000. Your third year is $9,600, and your fourth year will be $5,760. And if it goes anything beyond that, I think each preceding year is going to be $5,760 or less. But once again, double check with your CPA. Let me see. What else do we want to talk about this? So, that's pretty much it with the how to write off your car and the mileage deduction. There's been a couple of questions like, okay, what if I buy like a Tesla? Can I fully write that off using the bonus depreciation? Depends what model. I believe the Model X, which is classified as their SUV, as long as the gross weight is over 6,000 pounds and it is bought underneath your business name, you can fully write off that car in the bonus depreciation, which is you get to write off for 100%. Can't do it with the Model 3. Can't do it with the Model S. The new one, Model Y, I don't know if it's over 6,000 pounds, and I don't know if it's considered an SUV. It might be considered a light SUV. And the way your CPA will determine that is primarily by running the VIN, and it gives them like a code. But one thing that you do get is a $7,600 tax credit. So that's always a bonus. Now, somebody else said, what if I buy, like, I want to try to get that new Porsche Taycan Turbo or Turbo S or just their Taycan. Can I do bonus depreciation on that? Unfortunately, you cannot, even though I think the car is close to 6,000 pounds or more. Once again, it is a sedan and it is not an SUV. So the most important takeaways from writing off your vehicle is make sure you buy it underneath your business. You cannot depreciate these things under your personal name. They must be a vehicle that weighs 6,000 pounds or more, and it is a utility vehicle such as a heavy SUV, pickup truck, or a van. Crossovers generally do not apply to this, but your CPA can typically run the VIN of your vehicle to just double check if you do have a crossover, if it does apply. But generally, the rule of thumb is it is not, because it is not a heavy utility vehicle. And that is the main thing. And remember, not all businesses are treated the same. If you lease the car, depending on your profession, you will probably have more leeway in terms of what you can and cannot write off. If you're, more of a white collar professional, apologies. Let me rewind on that. Depending on your profession, like if you're a construction company and you bought 5 Ford Raptors, you will have more ability to write off more things on the vehicle because those cars will strictly be used only for work. But if you're a doctor and you have, for example, like a Range Rover, chances are your CPA will say, hey, look, let's just deduct, if you're leasing the car, let's deduct the lease payments, but we don't want to deduct the other things for certain reasons. Now, if you're able to do it, great. If they advise you not to do it, just kind of take their word on it, because sometimes the pennies to the dollar that you're saving is not worth the headache. And that is the main thing. If you guys have any questions, please let us know, and we'll do our best to answer them. We hope you enjoyed this episode, and we look forward to seeing all of you next time. Have a wonderful day, everyone.